Every country is in debt. Every person owes money. Governments, corporations, households, everyone's drowning in debt. The total? $111 trillion. That's equal to 94.7% of global GDP.
Exploding debt is a real worry if you're an investor.
Debt is piling up.
The music stops when you get a major crisis.
The big question is, at what point does the bond market break?
The most powerful weapon in China's arsenal, selling US treasuries.
The entire world's annual economic output. But here's the question nobody asks. If everyone's in debt, who are they in debt to? Who's getting paid? Who's collecting interest on $111 trillion? The answer will make you furious. Because the money isn't owed to aliens. It's not owed to future generations. It's owed to billionaires, to pension funds controlled by the wealthy, to insurance companies owned by the rich. The 1% lend money to governments, collect interest paid by your taxes, and get richer while you work harder just to service their returns. This is the greatest scam in human history, and today you're going to learn exactly how it works. Global debt hit $111 trillion in 2025. That's not a typo, $111 trillion. To put that in perspective, if you spent $1 million every single day, it would take you over 300,000 years to spend that much money. Government debt makes up the biggest chunk, around $70 trillion. The United States alone owes $36 trillion.
$36 trillion. That's the debt, 36 trillion.
120% of GDP and rising debt service costs.
Japan owes $13 trillion. China owes $14 trillion. Every major economy is buried in debt that will never be fully repaid. Corporate debt is another $30 trillion. Household debt adds $11 trillion more. Add it all up and you get a world where everyone owes money. But to who? The standard explanation goes like this. Governments borrow money by selling bonds. Corporations issue corporate bonds. People take out mortgages and loans. It's just how modern economies work. Nothing to see here. That's a lie, because someone owns those bonds. Someone collects that interest. Someone is getting paid, and it's not you. Here's the truth they don't want you to know. More than 80% of global government debt is privately owned. Not by governments, not by central banks, by private investors. Pension funds own massive chunks of government debt. But who controls pension funds? Wealthy asset managers. BlackRock manages $10 trillion. Vanguard manages $8 trillion. State Street manages $4 trillion. These three firms alone control over $22 trillion in assets. Life insurance companies own another huge portion. When you pay your insurance premiums, that money gets invested in government bonds. The insurance company collects interest on those bonds. You're funding their returns. And then there are the ultra-wealthy households, the billionaires, the family offices, the sovereign wealth funds controlled by royal families and dictators. They hold trillions in government bonds, collecting guaranteed interest paid by taxpayers. The US government pays over $1 trillion annually just on interest. That's $1 trillion taken from taxpayers and handed to bondholders. Schools don't get funded, infrastructure crumbles, healthcare gets cut, but bondholders? They get paid first, always. Here's how the scam works. Let's use the United States as an example. The US government spends more than it collects in taxes, so it borrows money by selling treasury bonds. Who buys these bonds? Pension funds, insurance companies, wealthy individuals, and foreign governments. These bondholders lend money to the government and collect interest. That interest is paid from tax revenue. So your taxes don't just fund government services, they fund interest payments to billionaires who own the bonds. And here's the genius of the scam. It's presented as safe and responsible. Government bonds are risk-free investments. They're backing pension funds and insurance policies. If we didn't have this system, retirees wouldn't have pensions and people wouldn't have life insurance. But the reality is different. The wealthy get guaranteed returns funded by working people's taxes. While you're told there's no money for universal healthcare or free college, the government finds $1 trillion every year to pay interest to bondholders. And as debt grows, so do interest payments. In 2000, the US paid $220 billion in interest. Now it's over $1 trillion. In 10 years, it could be $2 trillion, all of it flowing from taxpayers to the wealthy. This isn't just an American problem, it's global. Every major economy runs the same scam. Japan's debt to GDP ratio is over 250%, the highest in the developed world. Who owns Japanese government bonds? Mostly Japanese pension funds and insurance companies, but also wealthy individuals and foreign investors. The Japanese people work, pay taxes, and service debt owned by the wealthy. In Europe, the European Central Bank has bought trillions in government bonds. But who benefited from that buying? Bondholders who sold at peak prices. Banks that held bonds and got bailed out. Wealthy investors who used central bank liquidity to buy assets. Even China, despite its controlled economy, runs on debt. Local governments owe trillions. State-owned enterprises owe trillions more. And who's collecting interest? Chinese billionaires, state-connected elites, and global investors who've bought Chinese bonds. The pattern repeats everywhere. Governments borrow, the wealthy lend, taxpayers service the debt, the rich get richer. Now here's where it gets even more twisted. They tell you this system exists to protect pensions and insurance policies, that these investments keep retirees secure and families protected. But think about it, pension funds invest in government bonds. Government bonds are paid with tax revenue. So working people pay taxes to fund pensions for retired people. That's just a direct wealth transfer between workers and retirees. Except there's a middleman. The wealthy asset managers who control the pension funds and collect massive fees. BlackRock, Vanguard, State Street, they manage trillions in pension assets and charge fees on every dollar. They're extracting wealth from both ends. And when pension funds underperform, who loses? Workers get reduced benefits. Taxpayers bail out underfunded pensions. But the asset managers? They still collected their fees. They still got paid. Governments know they can never repay this debt. $111 trillion will never be paid back. So what's the plan? Inflation. Print money, devalue the currency, and make the debt worth less. If you owe $1 trillion but inflate the currency by 50%, your debt is effectively cut in half in real terms. Who benefits from inflation? People who own assets. Real estate, stocks, commodities, the wealthy. Who gets crushed by inflation? People who hold cash. People with fixed incomes, the working class. So the solution to debt is to destroy the value of money, which hurts workers and helps the wealthy who own debt-backed assets. Another wealth transfer disguised as monetary policy. Every year, governments spend trillions on interest payments. That's money that could go to healthcare, education, infrastructure, or reducing taxes. Instead, it goes to bondholders. The US now spends more on interest than on defense, more than on education, more than on any single program except Social Security and Medicare, and it's only going up. This means fewer services for citizens, higher taxes for workers, crumbling infrastructure, underfunded schools, all so that wealthy bondholders can collect their guaranteed returns. And the best part? It's completely legal. It's not corruption, it's not fraud, it's just the system working exactly as designed. The wealthy lend money to governments, governments force taxpayers to pay interest, and the wealth flows upward. Global debt is $111 trillion. Every government is in debt. Every person owes money. But someone is getting paid. Someone is collecting interest on all that debt. It's not a mystery. It's not complicated. The money is owed to the wealthy, to pension funds controlled by asset managers, to insurance companies owned by billionaires, to family offices and sovereign wealth funds. The 1% lend money to governments. You pay taxes to service that debt. They collect interest and get richer. You work harder and fall further behind. This is the system. This is how modern economies work. The question is, how long can it last? Because $111 trillion in debt growing every year with interest payments consuming government budgets, this doesn't end well. Either through default, hyperinflation, or collapse, this system will break. And when it does, the wealthy will have already cashed out. They always do, while everyone else is left with nothing. Every country is in debt, but someone's getting paid, and it's not you.